afternoon, traders. It's TK, 05 October 2016, and this is your daily market wrap-up. First, for headlines, we've got copper on the day finding acceptance back at its fair value mark. Gold flirting with 1270. Crude, big lift on the day after lower than expected, or excuse me, a higher than expected inventory draw and lower than expected gasoline build. And the ES, super tight. Let's get it started off here with copper. As you can see, well, for those of us who haven't joined us or have missed the channel for a few days, we've got two volume profiles up here. Our little squiggly line here extending down and extending up are the associated volume weighted average prices for those two profiles. The green line is the volume point of control, and then the two red lines are the value area boundaries. You can see a couple days ago we popped up to the upper value area boundary, and we've since traded back into our longer term volume weighted average price, and we continued to gain acceptance there. In the Globex overnight, around 0100, we did tag that volume weighted average price, popped up and continued to trade lower, currently at 216, looking to trade down into 215.50, searching out this volume point of control and possibly even a bit lower to this longer term volume weighted average price. Obviously the lower value area boundary also in play at 213, but again, copper just finding acceptance near its fair value area. Moving over to gold. Gold on the day. Again, this is gold 60-minute chart. We talked yesterday about how gold has begun to fulfill at least what we had expected. A move down before lower. Timing-wise, always unknown in these markets, but we did talk about gold breaking down lower than this this developing pennant that happened over the past call it 3 months, 4 months. We expected to move lower down here into the 70% retracement region. Honestly, a move down to 1260 would not be unheard of, but we would expect from here gold to chop around and then begin to march higher, assuming geopolitical events cooperate. As you can see, gold's moved down. We had a fair amount of volume build at these lower swings. Again, not unexpected. 1283, 1290. That's going to be a tough area for gold when it on its way back up. And as you see here, we've begun to build more volume in the 1268 to 1280 region. So today, not much, to say on gold. We did drop down another $10 before we traded higher. This really not unexpected as gold begins to find where it wants to trade from. Where is it going to build a base from? This 70% retracement here, this is kind of a key area that we want to pay attention to at 1260. If we begin trading below that, and we begin finding acceptance below that, all bets are off. We need to then turn to our commitment to trader reports to support a longer term move in gold. I do encourage you guys to take a look. I'm gonna break it out here to the daily chart. It just makes kind of a bit of a finer point on it. I do want to encourage you guys to take a look at our past 2 weekly reviews where we discussed the commitment to trader report on gold, and specifically why we saw a breakdown happening, and we were able to say within the past couple weeks that it was coming soon. Actually, it was based on what we saw in the commitment to trader action in silver. These commodity complexes, at least the precious metal complexes, silver having a more industrial usage than gold, however, still having that safe haven precious metal hue to it, moves faster than gold. It was telegraphing a move lower ahead of gold. And so it'll be interesting to see now, do we begin to see commercial interests getting long? Who knows? That's the thesis. that we have here at ReadySetFutures is that this was a planned move in gold, and now that it's occurred, we can begin to accumulate a position and go long. So that's our activity on gold on the day. Crude, again, this is a daily chart on crude. We have two volume profiles here. One since the beginning of August that was drawn in just after, a meaningful low was put in, a swing low. And then we have our second volume profile. This was put onto the chart after the Saudi Arabian and the OPEC ministers' agreement to agree. Nothing official. You can see this swing high. We anticipated this getting attacked. I'd like to, zoom in here a little bit, given that today was the inventory report, and here it is right there. That's the bar. Let me get into the 5-minute chart. So here's the action. You can see price traded up into the upper value area boundary, trading lower, and then just kind of rejected out of the $50 area. Not to say that it's not going to reattempt it. That's the volume profile that you can see. You can see the high volume nodes. And let me move our little ticker chart out of the way here. So you can see high volume building up here around $50. It wouldn't surprise me to see the volume point of control shift higher as we gain acceptance here. And once that does happen, we can anticipate a shift in price, whether that's up or down. We don't quite know. My hypothesis is that it would be lower, considering the geopolitical trends that we have, impacting the crude oil market and particularly the lack of an inked deal. Again, the ministers have agreed to an agreement. No specific cuts, no specific commitments, more jawboning, if you will, in kind of the crude oil market. But today a big lift in crude. You can see the difference in the volume points of control. Our longer term volume point of control down here at 44.60, and our longer term volume weighted average price here at 46 versus our shorter term point of control here at 48 and volume weighted average price at 47.65. So interesting in crude, now that we've actually come up here, I would have expected a bit of a snipe on top, sweeping the stops that are up here before we were to move and, take another move lower down to 48. It's up to you whether a $2 move in crude is meaningful for your horizon and your risk tolerance. I don't know where you place your stops. Maybe you have a volatility stop. Maybe you have a momentum stop. Maybe it's a price level stop. I don't know. So it's up to you to say, is a $2 move worth it from a risk reward ratio standpoint? So that's our action in crude on the day. Let's head over to the ES, the last instrument that we'll cover. Let me get this. Here we go. And here is the ES. Pardon that. We have two volume profiles here on the chart, and in fact, there's three. But the larger one is our post-Brexit volume profile. The nearer one is the Federal Reserve's hawkish hold, and then the most recent one on the hard right edge is just today's trading action since market open, not Globex, but New York Stock Exchange. You can see a fairly thick green line here at 21.53. That's kind of the magic number. These apexes, these vertices of this triangle, they begin to reach out to a 21.54, 21.55 apex. Our volume point of control congested here at 21.53. Same with the volume weighted average price since our hawkish hold, 21.53. I had an order in the market today. I'm in the market actually now. I got in at 21.54. I had an order in up here at our upper value area boundary at 21.59. I was trying to front run this line by a few ticks. And, you know, the past couple of days I've gotten skunked. I just haven't gotten in. And so I decided to bring it in a little bit. 21.54 was actually the my entry price. And, you know, we got a couple points to the good. It's not, you know, so meaningful at this point. Our target's down in the 21.20 region. So, you know, we've got a lot of wood to chop here at the resistance line. You can see how price has, you know, respected this here at 21.37, here up at 21.44. I'd anticipate price either respecting it or not. And if it doesn't, you know, good night, Irene, for this market. You see here our lower value area boundary since the hawkish hold of the Fed at 21.38. 21.36 and a quarter is our longer term volume hold, lower value area boundary from Brexit. And so, again, just a lot of wood to chop. But we're at this base here 3, 4, 5 times. It's a weak base at this point. So we'll see. We'll see. Who knows what the catalyst could be. But, you know, let's kind of zoom in here. You know, as you see, you know, today's action, I'll pull up the 1200 tick chart just so you can see really today's action held between a value area of 2155.50 and 2152.50. 3 points, guys. 3 points to trade around. That's tough to make money. You know, it is tough to make money in a range like that. That's a really tight range. But, you know, if you're going to scalp back and forth, you got to be in and out super quick, highly skilled in order to do that. So congratulations if anyone was really able to take advantage of the market today. That's what we got for you today, traders. It's the 5th of October, 2015. I'm TK. This is for ReadySetFutures.com. If you like it, like it. If you really like it, click subscribe. Leave some comments for me. I just want to give a shout out to all of our new subscribers, all the guys who are out there viewing these videos. I really appreciate it. I appreciate that you appreciate what we're doing. But as always, it's your account, it's your money, and best of luck tomorrow, traders. I'll see you in the evening for another great daily market wrap-up.